With the stock market and the housing market surging to all-time high levels, you want to know what's the best investment today. Is it stocks or is it real estate? Well, I have the data and today we're going to break it down and I'm going to tell you what I think is the better investment. Let's dive in. For those new here, welcome to Dividends Indoors. I'm Joe and I'm on a mission to help you retire early with passive income through stocks and real estate, the two best asset classes of all time. Okay, so starting with real estate, and we're talking about rental properties here. We're not talking about your primary residence. As you can see, real estate does not reach that exponential growth, but it has appreciated at a steady rate of over 4% growth per year, which just beats inflation. Now, in recent years, we've seen real estate prices go absolutely bonkers. And now with high rates and high home prices, so many people are getting priced out of this market. It feels almost impossible to get a home, even though we are seeing a pretty strong correction in a lot of markets, primarily in the Southeast US. Now, with that real estate appreciation, you also have, if it's a rental property, cash flow where your tenants are paying off your mortgage every single month, and hopefully you have some over that amount every single month, and we call that cash flow. The more cash flow that you have on a property, the better. Now, stocks, on the other hand, stocks compound much faster than the real estate market. They do have that exponential growth that we're looking for. You're able to start compounding and multiplying your money a lot faster than real estate. Now, let's look at this chart. It's important to note that stocks have a historical growth rate of about 10% going back almost 100 years. That's with the S&P 500. And stocks also produce dividends, which is basically cash that companies pay back to their shareholders for owning their stock. At this point, you might be saying to yourself, well, why don't I just put all of my net worth into the stock market? It grows my money faster. It seems like it compounds at a much higher rate than real estate, and that's true. But let's hold on a second because there's a lot of reasons why I love real estate. Let me give you three. The first reason why I love real estate so much is because you can use leverage. What does leverage mean? Leverage is basically saying you don't have to pay for the entire asset up front. With real estate, you primarily put about 20% down. If you're purchasing a $500,000 home, that's $100,000 down. And with that 4% appreciation rate, you're not only getting that appreciation on your $100,000, you're getting that appreciation on your $500,000 asset. You can use leverage in the stock market. I would highly recommend against that because that's the quickest way that you could lose your butt in the market. Now, the second reason why I love real estate so much is because there's tremendous tax benefits when you own real estate. And this is probably a lot of you listening's number one reason why you love real estate. It gives you tremendous benefits in the tax world. You can use depreciation. You can use what's known as a 1031 exchange to keep deferring taxes when you sell. Just tremendous benefits in the tax world. We're not going to dive in, but we will do a deep dive eventually on this channel. The third reason why I love real estate is that it tends to have better cash flow, meaning I'd rather own $500,000 worth of paid off rental property than $500,000 worth of a dividend stock or a dividend ETF because the cash flow is going to be much higher in my experience on that rental property. Now, I hear the stock camp right now. They're screaming at me, tell them about the downsides. Okay, I got you. Let's dive in. I'm going to tell you three downsides of owning real estate that you should know about. The first downside to owning real estate is that it is more of a hassle factor and it's less passive than stocks. Your stocks can't call you at 2 a.m. complaining about a broken toilet. And yes, that does happen. And the real estate camp right now is like, but what about a property manager? I hear you. I have a property manager. But a lot of times you have to manage the property manager and they take 8 to 12%. There are good property managers out there. Most of them are not so good. Second downside to owning real estate is less liquid than the stocks are. You could sell your stock today, wait a few days, and then you have access to that capital. With real estate, it can take weeks, months, even up to a year if your house is not priced right. And then once you sell the house, there's a lot of expenses that go with that. Typically, it's about 6% on the seller side that they have to pay out to the real estate agents, and then that's not including all of the fees. So it is more expensive when you sell real estate and it's harder to get access to that capital. So the first reason why I love the stock market so much, and we touched on this before, is because the stock market offers compounding interest. Compound interest works like this. If you invest $10,000 into an S&P 500 fund and it earns 10% a year, after that year, you've made $1,000. But the next year, you've actually earned $1,100 with that same 10% return. And every year thereafter, your returns will increase. Albert Einstein actually called compound interest the eighth wonder of the world. He believed it was that powerful, and so do I. The second reason why I love stocks so much is that some stocks and some ETFs offer what's called a dividend. That's basically just cash paid back to the people who own the shares. And as the shareholder, if you have enough invested in that stock, you'll get paid on a monthly or quarterly basis, and that's complete passive income right there. That is the dividends in Dividends Indoors. The third reason why I absolutely love stocks is that you have the opportunity when you own a stock to have what's called a multi-bagger. We've seen this now with Palantir recently, Nvidia recently, but if you look at some of the historical returns of an Amazon and Netflix, any of the Mag 7 stocks, man, you've done so well if you've just held on. Granted, there's been some ups and downs along the way, a lot of them, but if you've held on, you've done so well. You just don't quite get that owning real estate. Your house may double every 7 to 15 years, right? But you're not going to get a 4x return on a single family home in 10 years. That's just not going to happen. And it happens pretty frequently in the stock market. Shout out Palantir. With all that said, though, there are downsides to the stock market. And the real estate camp is like, yes, we've reached that moment where he's going to talk about the downsides of stocks. I want you to own both. This channel is called Dividends Indoors for a reason. Let's come together. Let's own both. Here are 3 downsides of owning stocks. The first downside to owning stocks is that stocks are more volatile and they're harder to hold from a psychological standpoint. Now let's use an example. I don't whip out my phone every day and go on Zillow and look at the price fluctuation of my home. At one point, I used to do that with my Robinhood app or my Fidelity app, whatever you use to trade. I used to look at the price of my stocks and where they went every single day. That's not a healthy habit, and it made owning stocks that much harder. Here's a quick pro tip, something that I do. I check my stock portfolio about twice a month when I purchase stocks. So I get paid on the 15th and at the end of the month, and then I'll invest that money, check the stock portfolio, close out the app, close down the computer, won't check it again for 2 weeks. The second downside to owning stocks, in my opinion, is that it's harder to control your investment. Let's compare this to real estate. You can purchase a piece of real estate that needs some work, add value, add home improvements to it, and now it's worth way more than you purchased it for. With stocks, unless you're working in the C-suite or have a high position within the company, it's hard to make a direct impact on your investment. The third downside to owning real estate is that it is harder to retire early off of dividends from stocks, or if you've reached that number, let's say the financial independence retire early people, they reach $1 million, they reach $2 million, and then they want to draw from their principal. I don't think that's the most optimal strategy. I do want to have dividends, but I think that cash flow from real estate is truly the best way that you can live off of passive income in retirement. The bottom line is this: both are proven, incredible investments that have withstood the test of time that I want to fully be invested in for the next 75 plus years of my life. Yes, I said 75 years. I've been following that Brian Johnson plan. I'm just kidding. But I do want to invest in stocks and real estate for the rest of my life. But you came here today to find out where's the better place to park your money right now. Is it the stock market? Or is it the real estate market? And I will tell you, with where interest rates are at and where home prices are at, I believe that right now, stocks are the better place for you to park your money. Now, when interest rates drop, because it's not if, it's when, they will drop, and home prices come down to where you can get a good deal to buy a cash flow producing rental property, I believe that's the better investment. But today, right now, the answer is stocks.